The following is a presentation of TFNN. The Trader's Edge with Steve Rhodes. Call now, toll free at 1-877-927-6648 or internationally at 727-873-7618. The Trader's Edge. Now, Steve Rhodes.
Good morning, folks. Welcome to the January 10th, the fantastic Friday edition of today's Trader's Edge Show. I'm your host, Stevie Perseverance Rhodes, who absolutely knows that each of us should always be pioneers of our future versus prisoners of our past. Hope everyone out there is having a great day. Hey, let's make sure we have an extraordinary one. Now, the easiest way to do that is to always remember that life is happening for us, not to us. That's right. When you and I make that one little 2x4 shift, it means that we can find the gift in every set of circumstance that life is going to toss at us. Now, today, you and I, we're going to go check on the circumstance of these markets. We'll go figure out what those bulls and bears, what those buyers and sellers are communicating to you and I at just past 11 o'clock in the morning. I do want you to know that I'm absolutely grateful for your presence here. But more important than that, and that's this, during this next 53 minutes, I'm here to serve you. So feel free to send me an email. Send that off to Steve at TFNN.com. Inside the subject heading, please put radio show question. Of course, if you're inside our Tiger's Den, well, then any and every ping will do. So let's go ahead and get this show started on fantastic, fabulous Friday. Of course, this is Tiger Financial News Network. I'm Steve Rhodes. Welcome to the show. Well, we begin our day with U.S. indices trading at the downside. You've got the Dow that's down 662. The S&P's off 96. Nasdaq's down 396. Russell's off 52. Transports are down 156. Semis are off 133. That's about a 2.5% move to the downside. We've got gold that's trading up $26 at 27.17. Silver's up 22 pennies at 31.23. Light sweet crude trading out at 75.58. $1.67 to the upside. Natural gas is up 25 cents, print out at $3.95. 30-year Treasury is down 20 ticks, print out at 107.56 out there. If we take a look at it, so this, I'm still back to, I didn't resolve one or the major problem we thought inside that e-signal system, but it's got secondary problems, right? You fix one thing and then something else pops up. And that's the reason why I've got the white background screens going here today. But you can see here, one of the things I'm able to put on this set of charts out there for these primary instruments is you can see what their daily TD9 count patterns are. And the ones with the stars tell you about confirmed TD9 counts out there. For example, light sweet crude is going to, well, we've got light sweet crude up on our screen. So light sweet crude completed a TD9 count pattern. It did that on January the 8th. And that high is a critical high, that high being 75.29. If price closed the day above that level, that's going to suggest that we have a further rally. In fact, a strong rally with this pattern being negated within two trading sessions out there. Now, what that would really tell us is that if we look at the February weekly chart out here, is that light sweet crude should go tackle its TD9 count top. That TD9 count top formed out here on the trade day of June 2022 out the week of the month. I'm sorry, look at the month of June of 2022. Maybe I should go daily, weekly, monthly. Maybe I'll just change that around, make it easier for Stevie. So you've got some swing points out here. You've got a swing point from the week of July 24th, one of April 2024, one in September 2023, and then the one that we just took a look at from June 22. So you've got some resistance up above this level, so it won't be an easy move. Now, we look at the 30-minute time frame chart. Sellers are trying to do everything they can to keep that TD9 count top intact out here. In the case of light sweet crude for its 30-minute time frame, forms a TD9 count, a Rhodes Momentum Indicator top. It does that at 10 a.m. We close below the bottom of, or we close below its oscillator and change line at 11 a.m. And now that's suggesting a target of 74.65. Remember, the number here for light sweet crude at day's end is going to be 75.29. If we close above that, you negate its daily TD9 count top out there. Why don't we stay here for a moment? Let's take a look at the XLP. The XLP shows us in bar number 8 to the downside. That would be as of yesterday's close. So odds favor that this is going to go ahead and complete a TD9 count pattern today, and we'll complete that pattern tomorrow. On Monday. Now, that would then suggest, you can look at the daily time frame chart, that would then suggest a rally up towards its oscillator and change line. And that oscillator oscillator and change line right now printed out at 77.98. Weekly time frame chart, which has a TD9 count top, is now testing a key level of support. That's 76.89 out there. So watch 76.89. If you get a daily TD9 count bottom, which is going to take place today, unless there's some gigantic rally in the XLP. And if 76.89 holds, pretty decent suggestion that it's trying to form that bottom today versus on Monday out there. And if you look at the 30-minute time frame chart, what you see out here is you see a Rhodes momentum indicator signal that's trying to form. If we take a look at the XLE, the energy sector, so let's just take a look at the active signals that are on my chart here before we move off of this and start taking a look at other things, intraday charts and so forth. The XLE also has a TD9 count top. Now, in order for the XLE to negate its TD9 count top, price is already trading below that level right now. It needs to close above 88.61. We're trading at 88.15 out there. So it still has its TD9 count top. That suggests that the XLE should pull back to test support. And the support level would be right at about the 86.34 level. That's the top of its profile. On a monthly basis, all I see here is really a long-term sideways consolidation pattern. Weekly time frame chart, the XLE did find support at its breakout level. So that's what's going on there. The last one to take a look at that I see right now with my weary eyes is the Great British Pound. So those of you that trade currencies, what you should know is the Great British Pound is attempting to form a TD9 count bottom. Actually, it will do that today. It'll complete that pattern on Monday. What does that suggest? Well, that would suggest that it would rally towards its oscillator and change line up at $1.23. If it moves higher, then U.S. dollar index would feel pressure to the downside. The weekly time frame chart, that's in the bottom left out here, if you will. You can see last week price negated a TD9 count bottom. That suggests that price should at least move down towards the 1.209. So how do you put all that together? In the monthly chart, it suggests a move to 118. It would appear to Stevie that what you have here after 4 consecutive days of downside, maybe Monday will be 5, is you're going to get a counter trend move. And that counter trend move ought to take us up to the $1.23 level, and then price resumes itself back down towards the breakout level 1.209 out there. So that's what's going on with regard to those instruments. Let's do this here. Let's go take a look at what's going on intraday inside of the NQ. So we'll get to those time frame charts. So I mentioned, let's take a look at the well, they have the daily time frame chart. So the daily time frame chart, let's open this up here. What we had identified is that a close below the swing point here from December 20th. That swing point is at 21.00650. If we close below that, that'll trigger an A to B equals CD pattern to the downside. Let's go ahead and draw that in. The high is going to be the trading session of December 16th. The low is going to be the low from the bull sash candle on December 20th. Well, I wonder if I should do this. I'm going to do it anyways. Oh, perfect. It worked. Okay. I got some other issues going on, copying and pasting. So here you can see the 1-to-1 A to B equals CD would take us just below, gives us a price projection around 26.70. Don't quote me on that. These are approximations. I don't have my exact tool up on this set of charts. But 27.7450 is a breakout area as well. So I would expect that price to poke below that level. Maybe it closed back above that area. That's on the daily time frame. Now, if we quickly take a look at the intraday charts, do we see any kind of signals out here? Any kind of signals? I suppose on the 30-minute time frame, we could find an A to B equals CD pattern to the downside with that bullish hammer candle that formed here at 10:30. But price never even rallied up to its oscillator and change line. A very weak rally. Steve Rhodes with TFNN. Looks like we have lower price to come. We'll be right back.
If you're looking for potential trading setups in the stock market, then Rocket Equities and Options Report is a newsletter you should try. Tommy O'Brien delivers options and equity trades when the markets present them, using a combination of fundamentals and technicals. Sign up for Rocket Equities and Options Report today with a 30-day money-back guarantee, so you have nothing to risk. For all the details and to start your subscription today, visit the front page of TFNN.com. TFNN, educating investors.
Many trading newsletters attempt to focus on a narrow set of equities or commodities. While this works for some, it oftentimes misses many opportunities that possess huge gain potential. But how is an independent trader supposed to scan the entire market looking for these hidden opportunities? One simple answer: the Opening Call newsletter. Basil Chapman, developer of the Chapman Wave trading methodology, has been trading the markets for longer than most trading influencers have been alive. And over that time, he has honed his methodology in order to accurately call movements in a wide range of equities, from semiconductors to uranium to key indices and so much more. Basil is old school, taking the time to educate the trader while also giving his insights into key indices, selective stocks, and more. Opening call subscribers also receive access to dozens of educational live streams that can be accessed at any time for your edification. All first-time subscribers receive a 30-day money-back guarantee. So ignore the pop trading influencers and start learning time-tested technical analysis.
Steve Rhodes started his trading career as a student almost 20 years ago, and the student has now become the master. Steve won the prestigious Timer of the Year award in 2018 and barely missed that mark again in 2019, finishing at number 2 for the year. An amazing accomplishment. Steve Rhodes is committed to sharing his techniques and knowledge with anyone who wants to learn, and he shares his vast amount of trading knowledge every day in his Mastering Probability newsletter. Steve's award-winning newsletter, Mastering Probability, is delivered every trading day with updates throughout the afternoon. Sign up for Steve's market newsletter, Mastering Probability, and you'll receive access to 7 of Steve's educational webinars absolutely free. At TFNN, all our newsletters come with a 30-day money-back guarantee, so you have absolutely nothing to worry about. Visit TFNN.com and try Mastering Probability 30 days risk-free today. TFNN, educating investors.
TFNN has launched the Tiger's Den, hosted at Discord. TFNN has been educating traders for more than 20 years with live programming hosted by a variety of professional traders during market hours. The Tiger's Den, available to all tigers and tigresses for just $1 for the year. There's no catch or added costs when you join our community of traders. Sign up today and become a part of this educational community of traders. Just visit the front page of TFNN.com.
Welcome back, folks. Let's start with our first request coming in from Duncan inside the Tiger's Den. We're looking at NVIDIA. If we take just a recap of NVIDIA out here, just the last 4 trading sessions of the that we've had this week out here. Back on the trading day of January 7th, price rally. Well, it opened higher. It opened above the swing point. It tested the swing point November 21st. That had volume of 400,000 shares. That swing point was tested and rejected with 351,000 shares. If you can't bust them up, you try to bust them down. That's from our leader, fearless leader, Obi-Wan Kenobi. We can see that right now. Yesterday we talked about how price had formed a new profile with support at 135.76. That's the level that's being tested as we speak right now. If price closes below that, we should get back to the bottom of its consolidation. That's going to be in the area of about 128 or so. If we look at the weekly time frame chart, what we know is that the weekly time frame chart TD9 count top that formed back in November 22nd was tested and held. That had volume of 1.4 billion shares. Tested this week with 940. Of course, we're 1 day short with regard to volume out there, so you have to do the math on that one. What price is doing, though, it's trading above the top of its profile, which is at 131.60. So if 130, the profile level on the daily fails at 135.76, watch 131.60. Monthly time frame chart still maintains its Rhodes Momentum Indicator top. Price inside, consolidated with inside its profile. On a monthly basis, NVIDIA, we'll just open this up. In fact, let me just make this easy for everyone because I've gotten a number of questions about whether or not the market has made a major bear market top and we're just going to head lower for a couple years out there. Well, I don't think the answer to that is yes. And I can go back and we can show you. I don't want to do that. We've got too many requests right now. But what I can say is, we were to take a look at the monthly time frame charts. You tell me, and you're a longer-term trader, how important is knowing that green oscillator and change line? We're just looking here at NVIDIA. On a longer-term basis, would you short NVIDIA? Longer term, I'm not talking day-ish type trading, even swingish type trading out there. Would you really go short NVIDIA with price remaining above that oscillator and change line? No, in fact, that would be your buy the dipsters. Your long-term buy the dipsters would be out at that level out there. So that's an overview of NVIDIA. Hope that helped you out, Steve-O, and thanks for your request. Let's go to the next request, which also coming in from Steve, which was a take a look at the SMHs out here. As we take a look at the SMHs, we've also got a question from Ron inside inside the Tiger's Den. He's looking for a short inside this. Would a short be warranted right here? Let's try to figure out what the SMHs are doing. And the answer to that question is emphatically no. Now, why would Stevie say emphatically no with this thing moving lower? The reason I would say no is because we have a brand new profile that has formed out here. And it's bullish in structure, Ron. And right now, price is trading with inside the buy zone. The buy zone is 243.62 to 248.05. It would be disingenuous for me to suggest that you take a short knowing that price is trading into support. Now, what I don't know, maybe you do, but what I don't know is whether or not support will hold. But these profiles are important. This profile, by the way, wraps around the prior profile. That suggests of consolidation. As you look at the daily or even the weekly time frame chart, you can see a sideways consolidation that has basically been with us at least since the week of September 27th. So maybe with regard to, do you want to short a consolidation market? Well, here's where I would recommend. If you're going to short a consolidation market, short at the top of that consolidation. The top of the consolidation, I would say, would be around the 262.26-ish type level out there. So I don't see it as a short right now. If price closes below 243.62 out there, then let's come back and take a look at it. No, I'm not suggesting that we have a bottom right now or anything along those lines, but you do have that profile, that bullish structured profile out there. So I hope that helps you out. So we've taken a look at the SMHs, I think, from head to toe. You saw on the weekly, monthly chart, you've got a TD9 count top, and price is not even be able to take out. You want to take a look at the consolidation? Price has not been able to close below 235.43, the center of its bearish structured monthly profile out there. So that's what we see there. Gray Rock wants to take the gold contract out here. So let's get back towards our day trading system out here, where we're only really looking at the daily and then the inter-period charts below that. On a daily time frame, as we mentioned, bar number 8 is going to go ahead and form today. This suggests you could get a top between today and Tuesday of next week. If we look at the 5-hour time frame chart, the 5-hour time frame chart negated its TD9 count top. It's saying not today. If we take a look at the 4-hour time frame chart, it also negated its TD9 count top. Price trade on both of those above its oscillator and change line. If you're short, watch those numbers, 26.99, 27.04. If we take a look at the 120-minute chart, it says, hey, Stevie, I got a TD9 count top. And in fact, it does. But right now, price is trading above, and this is the bar that's going to be following bar number 9. So the pattern completes here at 12 noon. Now, what price should do is pull back and test its oscillator and change line at 27.11. But the question is, did bar number 9 already do that? The bar that closed here at 10 a.m. And it's a possibility. But I will share with you that support right now, let's say first level of support about 27.11-ish. No topping pattern on the 60-minute time frame chart. No topping pattern on the 30-minute. Got a Rhodes momentum indicator top on the 15-minute time frame chart. And that says if price were to head lower, it could target 26.96 out there. So watch that level. So how will we know that? Really, the first level, I don't know. You'd almost have to go down to a 5-minute chart. I'm not going to do that right now. It would take too long for me to actually do that at this stage of the game. So with regard to gold, I would have to say, based on the 4 and 5 hour charts out here, really the 2-hour chart. If we're going to head to higher price, it doesn't have to happen today, Gray, but you're going to need to see a close above the high, which is 27.35, if we are going to head lower. So that's what we see when we take a look at the gold contract. You've got the dude inside the Tiger's Den wants to take a look at, let's see if I can get there. Is this it here? It is not. That was the SMH's EQT. So let's pull up EQT out here, see what we've got going on. This is going to negate or likely negate a daily TD9 count top today. Completed that pattern yesterday. A close above yesterday's high, which is 49.20, negates that signal and says we continue to head north. If you look at the weekly time frame chart could be confirming an A to B equals CD pattern to the upside. The swing point that we're going to measure is the week from November 22nd. 53 million shares traded hands that week. This week, with one light in the loafers, we're at 22 million shares. So we're closing above that swing point. I don't care how we slice it and dice it with lighter volume. Does that mean it won't head higher? Absolutely, positively not. Does that mean it won't form an A to B equals CD pattern to the upside? Absolutely, positively not. In fact, it will do that. It just simply won't be confirmed. But now we take a look at the monthly time frame chart. We can see the TD9 count top out here, and that says that the real high, this is probably where price is gunning, running is for 51.73, the high from August of 2022. A close above that level, and you are off to the races to the upside. The daily is saying you're off to the races right now. The weekly is seconding that motion, although not with volume, but does look like EQT wants to continue to move higher. As I look at my intraday charts out here, nothing yet to really be worried about that IC. So that's what's going on there. You also had a request to take a look at EKSO. EKSO right now is pulled back and tested its oscillator and change line, and the bottom of its profile at 66 cents. That's the level for you to be watching out there. On a weekly chart, looked like you're going to have a breakout, but price is broken back inside its profile out there. It's got support down at 64 cents. That's what I see for EKSO. Steve Rhodes with TFNN. We come back from this break. We're going to look at SOUN, MP, Oracle, Costco, and Nordic American Tankers. Of course, we've got room and time to do even more. We'll be right back.
Building wealth trading in the stock market seems impossible to most people. They think it's too volatile and risky. Most people aren't going to take the time to educate themselves on how to do it right. But you're not most people, are you? At TFNN, you'll get the guidance you need to refine your strategies and techniques to invest like a pro. Because you'll be a pro. All TFNN subscriptions, books, software, and courses are available at TFNN.com. And I'm even going to tell you how to get them for less. Use TFNN's Tiger Dollars and you'll get up to a 20% bonus on your purchase. And once you apply them to your account, Tiger Dollars are automatically used for all future or recurring charges. Tiger Dollars also never expire, are fully transferable, and are a great way to add savings to your newsletters or services. Become the investor you were born to be at TFNN.com. TFNN, educating investors.
In the world of trading, only a few names stand out like Larry Pesavento, a pro's pro with over 50 years of experience. Larry has seen it all. A former Chicago Mercantile Exchange member, Larry has authored 10 books and trained over 1,000 traders with his unmatched expertise. Introducing Fibonacci 24/7, Larry Pesavento's daily trading service that turns the complexity of markets into opportunities. Published every Sunday, receive a comprehensive report packed with detailed commentary, charts, and videos that illuminate the patterns shaping the markets, with updates throughout the week exclusively for subscribers. Whether through charts or videos, Larry's analysis is your roadmap to navigating the markets. You can sign up now at TFNN.com for just $97. And with all TFNN newsletters backed by a 30-day money-back guarantee, you have nothing to risk. For all the details, visit TFNN.com. You'll find Fibonacci 24/7 right under the newsletters tab.
This market has turned red, Tigers, and the question we should be asking ourselves is how to position for a potential bear market. Plenty of gains can be made in bull markets, but if we've entered bearish territory, that strategy needs to change. So, how do we pivot so we can see green in the red? Join Larry this month, January 10th and 24th for live trading action. You'll sit next to Larry as he places live trades, explains his methodology, and answers questions live. Larry brings his decades of trading knowledge directly to you, teaching you how to navigate this shifting market. Go to the front page of TFNN.com today and secure your spot fast for live trading Fridays with Larry Pesavento. Happy New Year, Tigers. We'll see you January 10th and 24th. TFNN. Educating investors.
This portion of the Trader's Edge is brought to you by Direxion's daily leveraged and inverse ETFs. Whether you're a bull or a bear, you choose the direction. Visit Direxion.com. Investing in the funds involves significant risk and should only be utilized by investors who understand the impact of leverage and actively monitor their portfolio. They are not designed to track the underlying index or security for more than a day. Before investing, carefully consider a fund's investment objective, risk, charges, and expenses contained in the prospectus available at Direxion.com. Read carefully. Distributor Foreside Fund Services, LLC.
Welcome back, folks. We're taking a look at ticker symbol SOUN. If we look at its daily time frame shows that we closed below profile support yesterday at 1611. We're trading below it again today. You've got a profile change in trend. That doesn't mean all is over. Now it's gunning towards the breakout level at 638. Not saying that it's going to get down there. It's trading at 1398. Today's bar number 7 of a TD9 count. This suggests, Gray, that you should be looking for a TD9 count bottom to potentially form. You still have to get to lower price sometime next week. It could be between Monday, Tuesday, or Wednesday. But again, you have to get the lower price. The weekly chart is showing us right now that it closed below 1510 will signal that price has lost momentum. Now, its level of profile support would be down at 1167 out there. Will price get there? There's no other support that I've got until price gets down towards 1167. The monthly time frame not really provide us with a ton of information. That's what I've got for you on SOUN. I hope that helps you out, and thanks so much for playing the game this morning and helping Stevie get some requests in ahead of time. We're going to go take a look at the MPs out here. This is for Fletch inside the Tiger's Den. Fletch, if we take a look at MP, what we know about this week is that price got up, tested, and rejected its breakdown level. So your key level of resistance, no matter what going forward, is $21.13 out there. The daily time frame, that since price couldn't bust that up, maybe it's going to try to bust them down to test support. And if it does that, 1830 would be your support level that you would be watching. The weekly time frame is trying to close above profile resistance. So here's another key level for you to watch, and that's up at 1935. We're at 1945 right now. So you know 2113 is key resistance. The question is that 1935 key resistance as well? And you will find out at day's end out there. So do we have any other signals that are worthwhile to discuss, or what direction is price going to head? It looks to me, if it gets below that 1935 level, is that what I said? 1935. You should anticipate a move back to the 1830 area. So that's MP, Fletch. Hope that helps you out. Bob in Spokane wants to take a good Oracle. ORCL. Let's get that up on our screen out here. If we take a look at Oracle, today is going to become bar number 9 of a TD9 count. So what that says, Bob, is that there could be a bottom today or on Monday. What if there's not a bottom and it continues to head lower? Well, then if the TD9 count pattern that's going to go ahead and form today, complete on Monday, if that pattern fails, I would say the next price projection level will be down at 137.95. If we look at the weekly time frame charts, got a beautiful Rhodes momentum indicator top. Price has been below profile support at 170.26 for 1, 2, 3. This will be week number 4. I would say that's a change in trend. That would suggest price might want to move to 136.46. And on a monthly time frame chart, last month you confirmed a Rhodes momentum indicator top with that bearish engulfing candle. This month we have a gap to the downside. Price is testing a key level of support. The profile formed below price, and that's usually a bullish message out there. That bullish message says 155.98 at month end ought to hold as support. No idea whether it will or it won't. Do we need to worry about A to B equals CD patterns to the downside? I would say the answer to that is no. I'm not even sure that it actually has formed one out there. In other words, I don't know if I can see a retracement that's close to a 0.382 retracement. We don't have to worry about that. We've got the TD9s on our side out there. So Oracle going to go ahead and confirm a TD9 count bottom today, complete that pattern on Monday. If the low of the pattern gets violated Tuesday, Wednesday, what have you, tells you about a strong move to the downside, and that would take us towards a 136.46 to 137.95 level out there. So Bob, hope that helps you out. You also wanted to take a look at Costco. COST is the ticker symbol. Let's go ahead and pull that up on our screen. Oh, I put that in there twice. No wonder I was screwed up. Okay. Well, there's other reasons for me to be screwed up. But that, if we take a look at Costco, it's rallied. Nice rally, right? That rally over the last 4, 5, 6 days. What has it done? Rallied right up into that red oscillator and change line. Testing and rejecting a red oscillator and change line, especially after it's changed colors, is not the most bullish signal out there. 937.21. It's a short, still got more time left in the day. Price were to close above it, we'd have a different outlook. So right now, resistance, the first level of resistance, or second level of resistance, the most important level of resistance, failed. 937.25. Another level of resistance, the top of its daily profile, also failing as we're trading below that. That being 930.71 out there. Now I still see a series of higher lows out there. So maybe it's going to take another run for that oscillator and change line at 937.25. It's not like we've got a daily top, but it can be a top just getting back to that oscillator or getting back to resistance. So far, resistance is holding. The weekly time frame chart has a Rhodes Momentum Indicator top. It was confirmed with a three-river evening star pattern a couple of weeks ago. Price last week closed below profile support. I would say today's close is very important. Does today price close below the bottom of its weekly profile, 923.70? We're trading above it right now. If it doesn't, then it really screws up our signal information. Not really. Doesn't screw up anything. If it does close back above it, then that would be a real signal to you and I, Bob, that price should at least go retarget that 937.36 level, because a key level of support will have been tested and rejected on the weekly time frame. So today's close is muy importante. Watch the 923.70 level out there. And you also have the monthly chart that is testing a key area of support this month. And right now that's at 900.04. So that's what we see when we take a look at Costco out there. Thanks for your request as always, and you are most welcome. Let's go take a look at Nordic American Tankers. Did Stevie get enough time to fire this up? The answer is he did not. So what we're going to do is I'm going to switch from this set of charts, because this one should go ahead and load faster. Just simply because I don't have the intraday charts on another screen. So let's take a look at Nordic American Tankers. Dan is looking for this to get to 290. I don't know if that's up to 290 or down to 290, but we're going to find out momentarily here when these screens actually go ahead and load for us. We've got the daily time frame, the weekly, and the monthly time frame out there. How about that How about that Penn State Notre Dame game last night? I mean, that was a great football game. It went down to the wire. You got to love it. Nordic American Tankers, you're saying 290. It already hit 290. Didn't it? Dan, what you like about Nordic American Tankers today? Well, first, you like that TD9 count bottom. That probably, and the Rhodes Momentum Indicator bottom, that probably what you got to end to that on the daily. The weekly had a TD9 count bottom. The monthly has a TD9 count bottom. Boy, you got to love the nines on the Nordic American Tankers. Today, price gapped up above its TD9 count breakdown level. That was at 275. That's a key resistance level. So price trading above that says we're headed north. We will especially head north if the weekly chart can close above the top of its profile this week, and that's measured at $2.86. We're trading at 286 right now. I want that to close at 287. No, I'd prefer that it close like around 290 at the high, or 291 or anything like that. Get away from that 286. 286. So you are running into resistance. The daily says I'm ready to rock and roll to the upside. The weekly is saying, well, if you really are a rock and roller out there, you'll be able to get above and close above that 286 level. So, but everything here, long term, intermediate term, daily, looks muy bueno. Steve Rhodes with TFNN. We'll be right back.
If you spend any time online researching trading techniques on how to begin your trading journey, you've no doubt come across many folks who push Forex trading as a way to make big money quickly. Unfortunately, there are equally as many stories of these so-called Forex professionals just looking to make a quick buck off aspiring traders without actually teaching the ins and outs of the Forex market. This is what sets Teddy Keckstad's The Tiger Forex Report off the riffraff. Every Monday, former Chicago Mercantile Exchange member and author Teddy Keckstad releases his Tiger Forex Report newsletter, where he dives into the complex world of Forex and takes time to actually teach you his methods that have made him so successful in the fast-paced and rewarding world of Forex trading. Furthermore, all subscribers receive access to archived live streams of Teddy's, where he provides university-level education to help you in Forex trading. All first-time subscribers receive a 30-day money-back guarantee. So what are you waiting for? Forex awaits.
In the world of trading, only a few names stand out like Larry Pesavento, a pros pro with over 50 years of experience. Larry has seen it all. A former Chicago Mercantile Exchange member, Larry has authored 10 books and trained over 1,000 traders with his unmatched expertise. Introducing Fibonacci 24/7, Larry Pesavento's daily trading service that turns the complexity of markets into opportunities. Published every Sunday, receive a comprehensive report packed with detailed commentary, charts, charts, and videos that illuminate the patterns shaping the markets, with updates throughout the week exclusively for subscribers. Whether through charts or videos, Larry's analysis is your roadmap to navigating the markets. You can sign up now at TFNN.com for just $97. And with all TFNN newsletters backed by a 30-day money-back guarantee, you have nothing to risk. For all the details, visit TFNN.com. You'll find Fibonacci 24/7 right under the newsletters tab.
For traders who crave risk, Direxion's daily leveraged and inverse ETFs provide opportunities to magnify short-term perspectives with up to 3 times a daily leverage, utilize bull and bear funds from both sides of the trade, and trade through rapidly changing markets. These are highly leveraged ETFs with daily resetting designed for short-term trading, not long-term investing. Whether you're a bull or a bear, you choose the Direction. For up-to-date pricing and performance, go to Direction.com. Investing in the funds involves significant risk and should only be utilized by investors who understand the impact of leverage and actively monitor their portfolio. They are not designed to track the underlying index or security for more than a day. Before investing, carefully consider a fund's investment objective, risk, charges, and expenses contained in the prospectus available at Direction.com. Read carefully. Distributor Foreside Fund Services, LLC.
This program is brought to you by Vista Gold, traded on the NYSE American and TSX under the symbol VGZ.
Welcome back, folks. We're looking at ticker symbol MPWR. Maybe that's manpower. That would be Stevie's guess. This is for Duncan and Steve inside the Tiger's Den. So, Dunk, right now you got price on the daily time frame. You can see it's testing that key level of support. It's trading below profile support that formed yesterday. That profile level of support was at 594.90. The next level of support, which is what we're trading into right now, is that red oscillator and change line. And that actually is printing at 585.97. If we close below that, it's going to increase your odds of a move back towards its TD9 count bottom pattern out here. We're trading inside that swing point as we speak. That's a swing point from November 20th. The volume there was 1.6 million shares out there. I don't know where the 5 came from. And today we're pulling back so far with 292 and 2 hours of trading. So you are pulling back with lighter volume out there. That's the only good thing that I can find out here. But if we close inside that swing point and we don't reject it, to reject it means a high, a close above 587 even Steven, and you close below that red oscillator and change line, it increases the odds of a move lower. Now let's look at the weekly time frame chart. Weekly time frame chart shows that we're also testing key support. That's the bottom of its profile. The bottom of that weekly chart out there is at 587.44. If we close below that, that's going to increase the odds of lower price. The monthly time frame chart for manpower completed a TD9 count and Rhodes Momentum Indicator top. Price is trading below profile support at 622.42. We closed below that last month. We closed below that the prior month. It's really signaling to you and I that it wants to make a move towards that breakout level at 542.73. So manpower, MPWR, day number 3 consecutive moves to the downside out there. We have seen bounces, at least one-day bounces after 3-day moves to the downside. Maybe you get that, but manpower is suggesting to both you and I daily, weekly, and monthly that it wants lower price. So I hope that helps you out, and thanks so much for helping me with the request out there. Also, Satish is getting in on the game. Thank you, Satish. Wants to take a look at HURA. Hooray out there. When we take a look at it, do you like what it's doing today if you're long? Why? Because it's traded above profile resistance at 445. So a close above 445 is going to suggest a further move higher. Now, what the Sam heck is going on with this? Is it HURA? I don't have my other system going. That's the only downside with it. I can't really see who this is. Not that that matters, but is this like it's acting? I look at the weekly and like this is a double or a triple or something like that. An ETF. I don't know that that's the case, but here's what I can share with you. Whereas the daily looks good because price is above profile resistance, the weekly looks bad because it's below profile support. And on a monthly time frame out here, I can't get anything. I can't get any read on this. Satish, my apology. So I don't know what this is. Not that I need to know, but it's trading. That sideways movement looks like it's a double or triple or something along those lines out there. And if that's the case, And I don't know that if that's the case or not. So we got two different messages out there. So we're going to have to go with that neutral signal. I can't really come up with anything better than that. So sorry that I couldn't be more succinct, but sometimes, I'm not going to be disingenuous and read something into, I'm just narrating the charts is really all that I'm doing. I'm trying to keep my opinion away from it. And of course, the opinion is, for example, if you trade above resistance, that's a bullish thing. Maybe some people have a different opinion than that. Or you trade below support, that's a bearish thing. Really, I know that some of the stuff that I talk about, Rhodes Momentum Indicator, TD9s, things like that, maybe sound a little foreign to you, but really all you and I are doing, we are looking for support and resistance. We are looking to see, is that oscillator and change line green or red? We're looking to see, are we forming a bottom or a top out there with the signals? It's really that's really what we're doing here. And with regard to HURA, we got conflicting signals between the daily and the weekly time frame. Sometimes that's the way that it rolls. When that gets resolved, then we'll have a better feel. DocuSign, and Nicholas would like to take some shares, would like to take a position, add a few shares inside of DocuSign. You know what I'd really love to tell you to do is to do just that. But the problem is I'm not going to necessarily have a bottom pattern. So if DocuSign can pull back today, Nicholas, that's what you're looking for. Bar number 5 of DocuSign was January 3rd out there. The close of that was 90.21. That's what DocuSign has to close below today. We're at 91.43 to form a TD9 count bottom pattern. So if we got that, then Stevie would say, hey, you're going to head higher. Now, what if we don't get that? The TD9 count pattern we're looking at would go away. We won't see that if we look at the Polar Beast charts on Monday. But what doesn't go away is the bullish structured profile. So you had a dual bullish structured profile that formed yesterday. Again, where's support, where's resistance? Well, for support and resistance, we can use the oscillator and change line, and we can also use profile levels. You know that my preference is to use profile levels. I think it gives you and I an unfair advantage out there, and that's what we're always looking for. Here, you've got a buy zone. So you still can buy some shares out here, but let me finish reviewing the weekly and the monthly before we make that conclusion out there. But on the daily time frame, your buy zone is between 89.84 and 90.56. And that's exactly what's transpired today, at least at this stage. A close of 90.56 should get you to 93.44. And in this case here, Stevie would say 93.44 to 94.41. 94.41 is that green oscillator and change line. That's not going to be enough risk reward, I think, for you to take a long position, but that's what the daily charts are communicating. In the case of the weekly time frame chart, which has a negated TD9 count top, yet price is pulled back. It's pulled back and is tested 2 key levels of support this week. The first level being the top of its profile at 88.22. The second being its oscillator and change line, currently printed at 89.65 out there. So the weekly time frame chart is bullish. The daily time frame chart, if it could close above that green oscillator and change line, would also be bullish. That's at 94.41 out there. On a monthly time frame chart, the monthly chart is also bullish. Price is traded above its the top of its profile at 59.43. Now that oscillator and change line is red, so it's not nearly as bullish, let's say, as the weekly time frame chart. Price traded above the top of its weekly profile, as well as that green oscillator and change line. So what should Nicholas do here? I think Nicholas should use the information that I've shared with him to make the decision that's right for him. Is this likely to rally further? It is. 93.44, 94.41 seems like that is baked into the cards. Does this have a bottom? Only if it pulls back today. So, Nicholas, I hope that helps you out with regard to that. I see requests to take a look at United Health. Maybe there was something else that came in before them, but I'll just go to United UNH. I'm going to go back to those charts here that will populate a little bit quicker than the other one that we was just on. Testing out this new layout, this new structure. Hopefully I'll be able to get back to the older one, although on this one here, I'm not worried about changing screens so much out there, so don't make that error. So now we take a look at Humana. No, that's not Humana. United Health, UNH out here. United Health formed a TD9 count bottom pattern. You got to love it on the daily time frame, and now it is trading above profile resistance out there. It's likely to rally further. Let's go find the next level of resistance. See, we're trading above resistance on the daily time frame. We know we've got a bottom out there. So where's the next resistance level? Easy peasy. What's going on that weekly chart? Well, the weekly time frame chart shows that price pulled back, tested, and found support at its breakout level 486.09. That was a bottom. Resistance here is 537.78. Who asked for UNH? That was ELO. ELO, I would say price is going to go target 537.78. If it can close above that, which the daily is saying you should be able to, but the weekly is saying not so fast, then you ought to see it move up towards the 554 level. So that's what we see when we take a look at United Health. Steve Rhodes with TFNN. I'll be right back.
Many trading newsletters attempt to focus on a narrow set of equities or commodities. While this works for some, it oftentimes misses many opportunities that possess huge gain potential. But how is an independent trader supposed to scan the entire market looking for these hidden opportunities? One simple answer: the opening call newsletter. Basil Chapman, developer of the Chapman Wave trading methodology, has been trading the markets for longer than most trading influencers have been alive. And over that time, he has honed his methodology in order to accurately call movements in a wide range of equities, from semiconductors to uranium to key indices and so much more. Basil is old school, taking the time to educate the trader while also giving his insights into key indices, selective stocks, and more. Opening call subscribers also receive access to dozens of educational live streams that can be accessed at any time for your edification. All first-time subscribers receive a 30-day money-back guarantee. So ignore the pop trading influencers and start learning time-tested technical analysis.
In the world of trading, only a few names stand out like Larry Pesavento, a pros pro with over 50 years of experience. Larry has seen it all. A former Chicago Mercantile Exchange member, Larry has authored 10 books and trained over 1,000 traders with his unmatched expertise. Introducing Fibonacci 24/7, Larry Pesavento's daily trading service that turns the complexity of markets into opportunities. Published every Sunday, receive a comprehensive report packed with detailed commentary, charts, and videos that illuminate the patterns shaping the markets, with updates throughout the week exclusively for subscribers. Whether through charts or videos, Larry's analysis is your roadmap to navigating the markets. You can sign up now at TFNN.com for just $97. And with all TFNN newsletters backed by a 30-day money-back guarantee, you have nothing to risk. For all the details, visit TFNN.com. You'll find Fibonacci 24/7 right under the newsletters tab.
Are you ready to take charge of your financial future? TFNN is your gateway to the world of trading and investing. Whether you're starting out or scaling up, TFNN empowers traders and investors of all skill levels with top-notch investing systems, strategies, and techniques. It's time to protect and grow your money with insight you can trust. Join us live Monday through Friday during market hours for exclusive content that moves with the markets. At TFNN, we bring the trading floor to you. Our seasoned hosts are here to answer your calls and questions live on the air. Check out the Tiger's Den for just $1 and follow us on YouTube and become part of our vibrant community. And remember, at TFNN, we're so confident in the value we provide that we offer a 30-day money-back guarantee on all new premium newsletter subscriptions and services. You have absolutely nothing to risk, so why wait? Tune in live to Tiger TV and transform your trading journey, because when you know better, you invest better. Join us and experience the difference today. TFNN, educating investors.
Welcome back up, folks. Let's take a look at the ES Mini, try to get a feel for what it's doing at this moment in time. If we look at the daily time frame, prices testing its swing point back here from December 20th. That low out there is 58.66. Again, a close below that will trigger an A to B equals CD pattern to the downside. We're trading at 58.63. We don't have a bottom pattern that I see on a 5-hour, a 4-hour, or a 2-hour time frame chart, or a 60-minute time frame chart at this moment in time. If we were to see bullish reversal candles, those would confirm A to B equals CD patterns to the downside. Now, at least on the 60-minute time frame chart, let me show you what I'm looking at. If we take a look at this 30-minute time frame chart, you've got two different A to B equals CD patterns that have been drawn in there. The larger one that is still in play out here, that's this one that started from the high at 12 noon back on January 6th. The B point on this was down at 4 p.m., 1600 hours on January 7th. And then the C point would be the retracement into the high that formed out here at 6:30 in the morning on January the 8th. That 1-to-1 level would get us down towards the 5841 area. But there's several different A to B equals CD patterns here that we can use. If I use the most conservative one out here, that's much, then this is done like a 1-to-2 A to B equals CD, and it formed this bullish hammer candle. That's really what I want to get to. So what's the key level of support in the ES Mini right now? It's going to be that 58.52 level. If we close below that, we likely head lower. But you've got to buy the D point pattern for the 30-minute time frame chart that should take you up towards the Saucer and Change line, presently printed at 58.95. If you look at the 10-minute chart and the 15-minute chart, they both have Rhodes Momentum Indicator bottom patterns, but they haven't cleared any level of resistance. In the case of the 15-minute chart, that first level would be at 58.73, and on a 10-minute basis at 58.71. So if price can rally above those levels, great. You should see a further rally. Likewise, if those lows get taken out, and that low out here, and this is just on the 10 and 15-minute chart at that 58.48 level, then we continue to head lower. Folks, thanks so much for being here this week. I hope you had a terrific Thursday. I hope you're having a fabulous Friday. And I want you to have the best possible, wonderful weekend. Let's end it there, and I'll see you on Monday. Take care and be safe out there.